Hello. If you've been doing any kind of trading in the market over the last week, then you know it has been flat. I have walls with more activity and action than the market has been. The volatility has been, in all honesty, not very good. I'm Robert and welcome back. Let's get into it with a live chart. What we are looking at is my Euro USD position. This is my grid bot that is normally quite active. We are looking at the daily time frame, so we can see the whole week laid out, and it's quiet. We could actually see by looking at the chart that even if we go back a few, we really don't have a lot of positions for this kind of trading. It's very stable, very consistent, and very predictable. That's a good thing for this kind of a market because it actually does do a consistent amount of profitability. The downside is it's boring. It doesn't go anywhere fast. Overall, though, and realistically, that's probably the best kind of market you really want. Fast-paced moving markets where you have this extreme situation here on the chart, where within a matter of 3 days, the market just jumps in one direction, whether it's upward or downward. And here is another situation on the chart showing the upward. When you have these kind of huge, massive jumps, it really is disruptive to the market and to somebody with a consistent trading plan. And that really is the point here. Your plan needs to be consistent and to be able to weather any kind of situation. So let's go out to the monthly chart and actually look at the long term. And you can see that the market I've actually been working in is really only 4, 5, 6, 7, 8 months old. From the greater scope of trading, an 8-month market really isn't very much. It's actually quite small compared to what some people do with certain kinds of stocks where they hold for years. But it's consistent, it's predictable, it is reasonably comfortable in the trading approach. But let's look at the details of the market itself in respect to the actual orders that I've taken and traded. First of all, we can see right off the bat my finance rate is roughly the same as my traditional trading, or I should say my profits. And this is a negative finance rate, meaning I earn interest just for holding overnight. Some assets aren't always that generous. This particular one for my jurisdiction is. So 34 cents just for holding overnight. Not the greatest, not the worst, but every penny counts. So let's get into my actual profits. My last trade earned 33 cents. I took a deliberate reduction of 1 unit, gave up 13 cents, and we have basically my whole last trade history. But it's that consistency over time that keeps this entire process stable and comfortable. It lets me handle a reasonable level of autonomy and leniency within the process. And let's actually focus on one part of the chart. Let's look at these 6 top positions. So everything on the screen above the orange line and below the orange line. We have a pattern where I have repeated these 6 positions over and over in a sweep as the market goes up and down, ranging from roughly June 10th to today. So from roughly the last 2.5 to 3 months, I have been trading one trading pattern with only 6 positions at risk, using the same process over and over. And I have been profiting as the market goes down, and then putting out those positions as the market goes up. Some would call it a yo-yo effect. Others would just say it's grid trading. Some call it box trading or range trading. There's a lot of different names for it. Use the one you're comfortable with. For me, this is a grid style trading system because I'm trading a very consistent grid layer where the positions are reasonably uniform to each other. This works for my risk assessment, but it is boring and slow. So let's continue with the profits, and you'll see that, well, I got a good finance rate on the 19th of August of $1.04. Not bad. A couple of positions of 40 cents, and then a finance rate of 35 cents on the 12th of August. But from the 12th to the, is that the 19th? 13th, excuse me. So the 12th to the 13th was the weekend. But we keep going down, we see the same pattern. Basically, I'm getting one trade a day out of the market, if that much. Sometimes not even that much. For this kind of a technique, and from what I have had previously, that's actually quite slow. I have had as many as 10 or 12 trades a day. So recently, the market has slowed down a lot for volatility. But overall, I'm pleased with the way the market is going. I'm going to use a rather dangerous word to describe this. And it's dangerous because, quite frankly, it's not really a good market when it's put in this way. Right now, the market is comfortable. It's consistent enough that my risk assessments are predictable and comfortable. This is the most dangerous part of trading. When the market becomes too comfortable, people often become complacent. And in that is where losses really hit home, and they hit hard and very, very aggressively. So with that in mind, it's something I have to really watch, and watch carefully. I can't let this get out of control. I can't let this get ahead of me, and I simply cannot take my eye off the ball in this case. I have made some adjustments along the way to ensure that my trading is stable, but nonetheless, it's still very, very, I don't want to say tense, but it's an acuteness in the market that requires a certain amount of responsiveness. So this is my automated pair. Let's look at my manual pair. It has been much slower. And let's go to the monthly on it. And you'll see where I have been tracking the market, where the market is at, and where I have begun grouping all of my take profits where the green lines are. This market has been remarkably slow. And it is a slowness that has been far worse than the Euro USD market. The British pound Australian dollar has, for the most part, come to a complete grinding stall in terms of volatility. The market still moves, but you can see from the actual order book and liquidity, by looking right in the middle of the screen here, we see that it is very, very light. There is not a lot of action on this at all. It's very quiet. That puts this in a difficult situation as well, because I've got positions here that realistically I might not want to hold on to for a long period of time. I've got almost $40 of positions that I may not be able to get out of just because the market is so stalled compared to other markets. And I've already held this for quite a while. Now this is only 6 positions, and you're already looking at 8 or 9 months on this. So 8 or 9 months, 6 positions, and this is a pair I don't earn negative interest on. I get charged for holding this pair. So every day I hold on to one of these positions, I lose money. So having this sit here for 8 months is painful. At some point, when I do take profits, how much of my profits are really going to be left once I deduct all my finance rates that I've been charged for holding on to it? This is one of the problems with trading in a market like Forex, where you may be perfectly safe in terms of your margins and your risks. But if you have to pay a finance rate on your holding like I do, it's going to eat away at your profit over time. So that at some point, just holding this is going to be a loss. But if you take the loss, because you've already paid the interest every single night, it's actually going to end up being a double loss. Part of your risk management process has to be dealing with this kind of situation, dealing with this kind of market where it's against you no matter what. Let me know how your week has been doing. How have you been managing the quietness? Has it been helping your trading? Or are you like me, where volatility can be a blessing, as long as it's not too extreme? Let me know. Share your thoughts. Thank you for watching.